Get ready to take a flamethrower to the official narrative and learn what the elites don't want you to know. You're listening to The Tom Woods Show.
Hi everybody, Tom Woods here. It's episode 2683 of The Tom Woods Show. We have our old friend Saifedean Ammous on here with us. You know him from his online commentary and Twitter account, which is sharp and unmissable. But on a more fundamental and more permanent level, we know him, of course, for his very important books, The Bitcoin Standard, The Fiat Standard, Principles of Economics. One chapter of one of Saifedean's books spun off into an entirely separate book about fiat food, and we talked about that book on here. So there's so much that's so rich in there. Perhaps you'll read one of Saifedean's books, and a chapter will inspire you to write a book of your own. But anyway, Saif, welcome back.
Thank you for having me, Tom. Always a pleasure to be chatting to you.
Well, what I love about having you on is there's so many things we can talk about all in one episode. So we're going to jump around a little bit. Let me start off with a Bitcoin-related question. You obviously know about Michael Saylor and Microstrategy or Strategy, and they are describing themselves now as a Bitcoin treasury company. I mean, you know, they have software. I mean, they are a company, but in the traditional sense, but in another way, they're a very, very different kind of company. And we've started to see a handful of others following in its footsteps, but MicroStrategy just has everybody beat by a mile. What is your take or commentary on that particular phenomenon?
Well, I mean, it's been absolutely mind-blowing watching it unfold over the last 5 years. I'm going to get the bragging out of the way first and say that Michael Saylor wrote the intro for the second printing of the Bitcoin Standard. And he said that my book was the most influential book in getting him down the Bitcoin rabbit hole and getting him to adopt this Bitcoin strategy. So I think, you know, the basic idea of the Bitcoin Standard is that Bitcoin is the best money ever. And Michael Saylor, you know, I'm an academic, so it took me many years of research and study and digging up the Rothbard and the Mises and arguing with people online and getting called names by Keynes and calling them names and then writing a book about it and, you know, then starting to stack seriously and starting to invest in it seriously only after I had studied it very, very extensively. And it's a depressing reminder of the difference between the academics and the businessman, because Michael Saylor was a businessman. He read the book, he got it in a couple of months, and then he went all in. And then he understood, you know, okay, this is the best money. Well, then it makes sense to just go and put our entire balance sheet on this money rather than the inferior inflationary dollar that we usually use. And therefore, this is going to make the company outperform. And so initially, it started off with just, hey, let's base our cash balances on the better money and, you know, keep a little bit of the inferior money because it's what our income comes in and it's how we pay our salaries. So we're going to keep a little bit of that. We're going to keep as much as we need, but we're going to put everything else in bit. But then that started to cause his company's stock to appreciate significantly. And then, you know, given the way that Wall Street and the stock market works, if you can find a way to get your company stock to appreciate, then you have unlocked an entire world of financial products for people and exposure to financial products in certain ways. And so starting around 2021, well, I'm not sure when, I don't think I know exactly, but I would imagine it was probably around 2021 where Michael Saylor and MicroStrategy moved away from just putting in their own cash into Bitcoin to borrowing in order to buy more Bitcoin. And this is, I would say, you know, this is a little bit different from what I discuss in my book. In my mind, it's just a better money. And in my mind, I think as we move toward the Bitcoin standard, as the world becomes more Bitcoin based, we're going to see a lot less of these kind of fiat debt games. In fact, as I discussed in the fiat standard, the way that the current fiat monetary system works is heavily reliant on debt. And the reason for that is because money itself, the dollar itself, is debt. And so when you're creating new debt, when you take out a car loan, when you take out a loan for your company, a business loan, whatever it is, the bank that gives you that loan is creating new money. So there's an enormous incentive for everybody to get into debt everywhere in the fiat system. And essentially, Michael Saylor has basically found an incredible way of combining the Bitcoin and the fiat system, wherein you buy as much Bitcoin, you put as much Bitcoin as you can on the asset side of your balance sheet, and then you take on as much dollar debt as you can on the liability side of your balance sheet. And that's putting, the playing the dollar system and the fiat system, the dollar system and the Bitcoin system to the max. It's putting them both on steroids, because on your asset side, Bitcoin is appreciating. On your liability side, the dollar is depreciating. And the more Bitcoin appreciates, the more dollar debt you can take on, and the more Bitcoin you can buy. And then the more the dollar depreciates, the lower your liabilities become. And so therefore your balance sheet looks even better. And so then you can take on more dollar debt and buy more Bitcoin. So it's like an eternal flywheel, basically. And it's been extremely rewarding for him and for everybody who got on the Microstrategy train. They've been doing this now for exactly 5 years. 5 years and 2 weeks, exactly, to be precise, is when they first made the announcement. August 11, I think it was, 2020. And their stock, their market capitalization is up from about, I think it was $600 when they made the announcement. Now it's around $120 billion, something like that. They've got something like $60-70 billion worth of Bitcoin. They own about 3% of all the Bitcoin outstanding. So it's truly mind-boggling what they're doing. And I'll just say, as a humble academic, I never recommend anything to anybody except just buy Bitcoin, and I continue to stick by that. I don't claim to know enough about how corporate finance works for me to go out and recommend people do this stuff. So don't try this at home, kids. And if you do try it, don't try it because I said it. But it's worked out well so far. I think he's in a very strong position because he's the first mover who's tried this. So there's likely going to continue to be, he's going to be able to continue to do it as long as Bitcoin continues to appreciate. And now he's at a point where he's offering so many different products that you can see scenarios where even if Bitcoin drops, there are ways in which he's going to be making money. And so he's kind of hedged against it because he's offering all kinds of different products for Bitcoin and offering exposure in all kinds of different ways. But you never know, with these kinds of finance things, you never know how things can go. So I'm generally just, what I like about Bitcoin is since I got into Bitcoin, it allows me to live my life as a simple peasant where I just earn more than I spend, then I put the difference in Bitcoin and then watch as I outperform everybody in finance. Now, Michael Saylor has so far outperformed that, but not enough for me to risk my Bitcoins to get on this in any kind of significant volume. So we'll see.
It's interesting that I guess the Bitcoin all-time high is somewhere around $123,000 and change, but it's been hovering close to that for quite some time now in the 100 teens. And that has not dissuaded Michael Saylor at all from continuing to make Bitcoin purchases. He's not sitting there waiting for some big pullback and then he's going to make another big purchase. He seems to be in this for the long haul. He just keeps doing it and doing it and doing it. So I guess I want to ask you, the academics who love Bitcoin because they can describe it to you, they know all the lingo, they have a philosophical commitment to what it means on the one hand, and on the other hand, investors who see something that they think is likely to appreciate into the future. I mean, these are sometimes two different groups of people with two different sets of concerns, but yet still you have to have some interest in Bitcoin price trends. And some people have been wondering if maybe Bitcoin might, now this is the kind of famous last words that I'm sure I could come to regret, but maybe it has reached a stable point beyond which there won't be the kinds of massive drops that we've seen in the past. Now, I don't want to commit you to any prediction that people could clip and then try to embarrass you with, but do you understand what I'm saying? That maybe it's going to stabilize at this point?
Well, yeah. I mean, people have been saying that, the age of the big drops is behind us. Michael Saylor himself has tweeted, winter is not coming. That, now the big boys are here and there's just an infinite bid and all these corporations are coming in. And I think there is perhaps a case to be made just looking at the way that the price has performed since the launch of the ETFs. It's been a lot less volatile than it usually is. Well, maybe not a lot, but it has been a bit less volatile. If you compare to how things were going 4 years ago, and Bitcoin has these 4-year cycles. If you compare the last 2 years roughly, which is when the ETF started, or a little less than 2 years, if you compare that to the previous 2 years, to 4 years ago, to the 2-year period that was 4 years ago, I think you'll see a lot less volatility so far. So there's probably something to suggest that. I think there's a lot of money coming in. But I think the extra money, the growth in the volume of the money coming in and the growth in the number of people that are buying doesn't really change the dynamic itself. If we are going to see that, I would chalk it up to two things. The first one is that with every halving, the Bitcoin daily production drops by half. And so the annual growth rate of the supply drops by half. And so with each halving, the halving becomes less significant. Because the first halving, we went from something like 20% annual supply growth rate to 10%. And then with the second one, we went from around 10% to 5% or 4%. And then the third one from 4 to 2. And now the fourth one, we went from a little less than 2 to a little less to about 0.8. So, the move from 20% annual supply growth rate to 10% supply growth rate is arguably a lot more consequential than going from 1% to 0.8, from 1.8 to 0.9 or something like that. So the vast majority of the trading volume is coming from holders rather than from the mining. And so therefore, you would expect a little bit less of an impact with each halving. And that's essentially what makes Bitcoin good money. And that's what made gold money. The fact that the mining supply is largely inconsequential to the market dynamics. That's what distinguishes gold from all other metals. It's not because it's yellow and it's shiny. It's because of the fact that it's indestructible. It's constantly accumulating more and more stockpiles. So therefore, annual mining production is always the least significant to the gold market, the least significant to the overall market than of all the other metals. So gold mining is least consequential to gold price than all other metals, because with other metals, you've got a much bigger trading volume much bigger mining output compared to trading volume. So because of that, you would expect that this would drive the volatility down because it's a lot less variation in the production. And then the other thing that I will say is because, we've had 3 halvings, so we've seen these cycles. So people have probably learned to think about those cycles. So this is probably helping people buy in a way that is a little bit more constructive to reducing the volatility, because people expect that it's going to be going up. So we don't crash heavily. And as soon as it begins to crash, people start buying it up. And then if it goes up too much, people start selling it. So maybe we are kind of hovering around the kind of long-term trend with less volatility now than we did before, because people can look at the long-term trend using various models of understanding how it is, and they'll be able to buy and sell. But, we've heard this before. A lot of people said the same thing in 2021, and then look how that worked out. It crashed from 69,000 to 15,000. So I still wouldn't write it off, and I still would say that I would not want to be leveraged Bitcoin now. I don't think now is a good time to be in a position where you are at risk of, say, a 50, 60, 70% drawdown costing you your position in Bitcoin. So I wouldn't want to be in that kind of situation, because particularly now, usually the bear markets, the market crashes begin 12 to 18 months after the halving. It's happened in 2013. So we had the first halving in November 2012, and then December 2013 was the top. And then we had another 2-year brutal bear market. 2017, exactly 18 months, I think it was, after the halving. And in 2021, it was, I think, something like 18 months after the halving. So now we're about 16 months after the halving. So we are reaching the area where historically we had the big bear markets begin. Now, of course, doesn't necessarily mean that it would happen now, but now's not the time to be taking extra risk. I mean, I think if you wanted to be over leveraged Bitcoin, then maybe just take the next 6 months off of this. And then, afterwards you can probably go in and it'll likely be less risky. So I guess what I would say is now is make or break time for testing. So we're going to see. We're going to see it over the next 12 months if we're going to be getting a major drawdown from where we are right now. And I wouldn't want to be in a position where that major drawdown can hurt me significantly.
Hey, folks, it's time to put into practice the ideas we talk about on this show. Because I don't know about you, but I prefer to get my tax guidance from someone who hates the tax man with the same burning passion I do. And the great Matthew Cersley is a tax attorney you're going to want to know. He uses every one of his 819 IQ points to help liberty-minded folks just like you keep more of your money and stay out of trouble with the IRS. And by the way, I did say attorney, not CPA, and that means your conversations with Matthew are protected by attorney-client privilege. That's a very big deal, and you can't get that kind of protection from your accountant. And remember, another thing about Matt is that he's one of us. He's been on the Tom Woods cruise. He's been at my murder mystery parties. He's a member of my elite mastermind. He's been listening to the Tom Woods Show since episode 3. He's a real Woods OG. And he doesn't just do taxes. He builds strategies to legally starve the state. We're talking about entity structuring, income shifting, advanced planning. This is war by spreadsheet. So if you're running a business or even thinking about one, you need someone like Matthew in your corner. He knows how to legally reduce your tax burden, structure your business the right way, and avoid trouble while keeping every dollar you're entitled to. Go to agoristtaxadvice.com/woods. That's AGORIST taxadvice.com/woods and grab your free Agorist Tax Toolkit. It's full of powerful tools and templates you can use to get your business in order, track your expenses, and reduce how much the IRS takes from you without crossing any lines. Again, that's agoristtaxadvice.com/woods. Take the first step to keeping what's yours. It seems, though, that, I'm sure you're right, but I just want to add that it's like every time I turn around, I'm reading another story about more institutional purchases of Bitcoin, or in one country or another, restrictions on Bitcoin are being relaxed. So it does feel like in some way in the history of Bitcoin that a corner is being turned. Now, I don't know, a lot of times we feel like everybody who's at every time feels like they're living through a turning point. But I feel like for Bitcoin, the mainstreaming of it in a good sense seems to be well underway.
Yeah, it's definitely changed. I think, particularly with the election of Trump, it was a massive change in the U.S. in particular. And the U.S. is essentially the most important economy when it comes to Bitcoin in the world. It used to be China, I should say, but then they massively lost that leadership position where they put a lot of restrictions there. So now the U.S. is really number one. And it's a huge difference what has happened over the last couple of years with the Trump administration versus the Biden administration, and the way that they've gone after them. But I guess if you zoom out, you could also make the case of saying it's really not so much of a turning point in as much as it is just the inevitable long march through the global capital markets, if you want to call it. It's just Bitcoin's been growing, and it's, we call it number go up technology. All the numbers are always going up in the long term. And that's how we're going to grow these numbers. We're going to be getting bigger buyers. We're going to be getting bigger institutions buying more quantities. And it's going to be available in more and more capital markets. So everything's going according to plan. That's what I would say.
Let's shift gears now. We've talked about all your books at one time or another here, but they, as I'm sure you would agree, they bear revisiting. So let's say a little something about Principles of Economics. Now, there was a book published over 150 years ago called Principles of Economics, published in German by Karl Menger. And that was considered to be maybe the birth of the Austrian school right there. So what are the fundamental misconceptions that people are leaving economics classes with, that if they read your book, Principles of Economics, they wouldn't have? Like the big picture misconceptions they have of how the world works.
Yeah, it's quite a long list, but I'm going to try and hack at it. Let's see.
Yeah, I know. I'm sorry for that one, but
that's all right.
I'm curious about your answer.
Yeah. I think the main one is basically in the Austrian approach is the subjectivist approach versus the objectivist mathematical Cartan approach. And so if you go to most universities today, you learn economics in a very quantitative way, in which, it's the issue with quantitative is not math. It's not because Austrians hate math. I would say that it is primarily, and in a very precise way, if I wanted to encapsulate what the problem is, it's that with the mainstream approach, they quantify utility. They put a value on utility when utility is a subjective thing, and because it is subjective, we do not have a unit for measuring utility. And so therefore, in your average econ textbook, as I used to teach it in college, you invent something called a util, which is a fictional unit. And then you talk about utils, and then you give the kids problems to solve with utils. And then the grad students write their graduate papers with utils, and everybody pretends that makes sense, which is, imagine if we tried to do engineering where we don't have a meter, but when we don't have a common definition of what a meter is, but we just say, all right, let's just call it a meter, and it can be anything. It can be this big, or it can be that big, or it can be that big, but, we just call it meter. So that, I think, ultimately is the major stumbling block. Because once you do that, then you've turned economics into mathematical problems, which is great for teaching. It's great for learning. I think, kids benefit from doing math. I think it's a very good thing. But it's not economics. It completely obscures the fundamental issues of economics as you approach them from the Austrian perspective, which is that it is about subjective human choice. And when you do it about subjective human choice, it doesn't make for easy multiple choice questions. It doesn't make for easy mathematicization and standardization of education, and so can be a pain for the teacher who teaches it, rather than just give them a bunch of math questions and then they'll solve them. But the upside, of course, which I think is infinitely more important, is that it helps people think about how they take their own economic decisions and start understanding that it's all about you, it's all about your valuations, and then how can you maximize for your own benefit as you subjectively measure it. And I think perhaps the most important lesson, perhaps in my book, I may have said the most important lesson about several of these, but I think perhaps in this context, in terms of comparing it to the mainstream economics, I would say the main advantage is to think in terms of time preference. So from the Austrian perspective, time preference is extremely central to the way we approach economics. Time preference is at the root of the theory of interest. Is how we understand interest rates. Is how we understand basically lots of economic decision making. Whereas in mainstream mathematical economics, time preference is just a given constant, and it's a discount rate, and you apply it to the mathematical equations, and then you are able to calculate the correct answer. So there's very little depth, I would say, to the concept of time preference when you are mathematicizing economics, but there's a lot more depth to it when you think of it from the context of the Austrian school, from the context of individual choice. And that's why I think people who read my book, I think that's the most valuable lesson they take about from generally, even the midpoint stem. I had a whole chapter on time preference, and a lot of people told me that was the most important chapter they read. They came because they wanted to know when to buy and when to sell and how to get rich by buying Bitcoin. And it was like a Trojan horse. I tricked them to come and buy this book to learn how to get rich, and then I just went and fixed their life by teaching them about time preference. Because once you learn about time preference, it really revolutionizes the way that you think of everything. And it's something that I used to do when I used to teach at university. Doesn't matter what course I taught, whether it was macro or micro or international economics. there was always a lecture, at least half a lecture, when I would sit the kids down and tell them, listen, this isn't going to be on your exam, but this is the most important thing you're going to learn in this course. Pay close attention. There's this thing called time preference, and here's how it works. And you need to start thinking of your life in terms of the trade-off between the present and the future. And once you see it that way, you'll never see it different. You'll never see it the same way. You'll start understanding that governs everything. Why are you having trouble studying for your exam? And why are you choosing to go and drink and party with your friends instead of studying for your exam? Because you have a high time preference. It's the same reason that you eat garbage. It's making you have health problems. It's the same reason that you do all kinds of silly mistakes. You prioritize the present so much that you forget about the future. But once you become cognizant of the importance of that, then you're going to start seeing it reflected in all manners of different decisions. And I really think it works. It helps people in all kinds of unexpected ways. So people who read my books come to me and tell me, I started saving, I stopped drinking, I started becoming interested in starting a family. I started a family, I got married, I have kids now, and I used to spend all of my money on partying and traveling and hedonistic high time preference pleasures. But now I'm thinking of the long term, and here I am 7 years after thinking of this. My life is very different, and I'm financially secure, and I have a family, and I'm very happy, and all because they picked up a Bitcoin book or an economics book.
What about the complaint, though, that your criticism of mathematical economics is a criticism of scientific economics, that your economics is unscientific and old-fashioned?
Yeah, generally, I think I cringe whenever somebody starts to use the word science, and I try and avoid using it because it's just as an example, just the other day, there was this interview with Richard Werner, with Tucker Carlson, and Bob Murphy did a response video to it. And I'd heard about Richard Werner before, and I wanted to listen to the interview, and I have a long list of things that I'm listening to, and I wanted to put it on my list. And then he responded to Bob, and he said, he didn't get into the substance of the disagreement he has with Bob, but he just said, well, the difference between me and other economists, and basically him versus all other economists, is that he's scientific, whereas all the rest of them, they're just, I don't know. The implication is that they're just superstitious, pre-modern. I don't know. It's obviously not a good implication that you draw from it. But and it immediately turned me off from wanting to read the rest of his work. I mean, I had it on my to-watch list, and when I saw that, I just realized, what? You should be able to make your argument without having to resort to this kind of, but I have science on my side. We've seen how the word science has been used over the last 5 years, and if you have a scientific argument, you would actually put it forward. You would say, here is my scientific evidence, and here is my scientific way of thinking. You wouldn't even say it's scientific. You'd say, I believe this, this and this result in that, and here's my evidence for it. But if you need to say, oh no, because I believe this because I'm scientific, whereas all of you guys are just bumbling idiots, I get flashbacks and memories of COVID and all of those people telling me that, you have to destroy your children's lives and lock them up because you don't understand science. So for me, I think the term scientific gets abused in all kinds of different ways. And it's in economics, mathematical economics claims to be scientific, but I don't think that you could say that it is scientific. I think, obviously it depends on what you define as science, but the definition that I like to use for science is that it is the method of answering questions by proposing hypotheses and then experimenting to see if these hypotheses are true. And just because you put a whole bunch of papers, a whole bunch of numbers in your academic papers, does not mean you're doing science. You're not proposing a hypothesis and then performing an experiment. In economics in particular, you can't really perform experiments because we can't just run countries like experiments. We can't look at populations. We can't just take 5 million people and let them have a Keynesian policy and then another 5 million people and give them an Austrian president and then run controlled experiments where control for all factors. People have their own lives to live, and they're not going to live them according to our experiments. So we don't really have experiments in economics. And even in microeconomics in a laboratory, a lot of these experimental economics studies, in a sense, yes, you could argue it is scientific because they're doing it in a lab, but it's a lab and it doesn't really translate to the real world. You're putting a bunch of starving grad students in a room and you're asking them questions. And the idea that that is representative of the human condition at all times and places, I don't think necessarily carries forward. And so it's not really scientific. From the Austrian perspective, there's a humility of understanding that, we can't just run experiments on people like that. But what we can do is perform thought experiments. And that's where the Austrian scientific approach comes in. And of course, a lot of people like to laugh at that because, thought experiments, you're just making it up in your mind. Sure, okay, you laugh, but I find that to be a lot more useful, a lot more productive. When I've learned Austrian economics through thinking through the thought experiments of people like Mises and Rothbard, I found it extremely valuable for my economic decision making. Whereas when I was reading academic papers that are out there running regressions on data sets, I think some of the more important implications that you can't get from that is just to, know the literature, be able to be conversant in the literature, be able to hold a discussion with other members of the profession, but not as much useful information for your actual economic decision-making day to day.
Hey, everybody, you've heard me talk about CrowdHealth, which I use for my family instead of some insane health insurance policy that gets more and more expensive. My business partner, Paul Counts, just had knee surgery, and he wrote to sing the praises of CrowdHealth. Well, now they have their new Black Swan membership. It's the healthcare alternative for people who want autonomy over their care, their costs, and their lifestyle. So you're ready for those rare but potentially devastating Black Swan events in life. Nobody's really thrilled with their health insurance, and of course, everyone wonders, if something really devastating happened, how much would I be covered? Well, CrowdHealth, the health insurance alternative, is offering the Black Swan membership. We're talking healthcare for under $100. That includes a team of health bill negotiators, low-cost prescription and lab testing tools, as well as a database of low-cost, high-quality doctors vetted by CrowdHealth. And if something major should happen, you pay the first $15K, then the crowd steps in to help fund the rest. And of course, you'll join the crowd, a group of members just like you who want to help pay for each other's unexpected medical events. Black Swan moments might be rare, but good health insurance alternatives shouldn't be. Get started today for as low as just $80 per month for your first 3 months by using code WOODS at joincrowdhealth.com. CrowdHealth is not insurance. Opt out. Take your power back. This is how we win. Joincrowdhealth.com, code WOODS. Sometimes I will give examples like this. I mean, of course, Rothbard used to give the example of geometry, that it would be ridiculous to try to derive, let's say a theorem in geometry by, like, for example, Pythagoras, the Pythagorean theorem. We don't arrive at that by measuring a whole bunch of triangles and noticing that the same relationship holds in every case. Everyone would understand that that's ridiculous. That's just, it's that people think that the scientific method that you described, you gather data, you examine it, you formulate hypotheses, you test and all that, that's where all real knowledge comes from. But when we look at the legal profession, we don't test out laws and see how they work and then run experiments. We start with philosophical propositions about how how it's best for human beings to live among themselves. There are a lot of things people believe strongly that could not be proven in a test tube. There are a lot of people who believe that all people are equal on some level. Okay, there's no test tube experiment you can run that's going to tell you that. That is a philosophical presupposition. And that doesn't make it wrong. Nothing wrong with it. It's that different fields have different, I hate to use the word epistemology because it's almost always pompous jerks who use that word. But so this is an exception, everybody. But Aristotle said for different fields, different methods of reaching the truth are required. And
Yes,
so
and
in economics happens to be more like geometry than it is like physics. And it's unscientific to apply the wrong method to it.
yeah, and even in the natural sciences and most experimental sciences in physics or in anything that you're doing, the data on its own cannot tell you anything without your priors, without having priors. My favorite example is, imagine you get a new kitten, baby kitten, at around the same time when a building is being built right next to your house. Now, if you did a scientific experiment to try and see whether the kitten is causing the building next door to you to go up, you're probably going to find a strong correlation. Indeed, the kitten is making the building next to you go up, right? Because the kitten is growing and the building is rising. So every day you wake up, you weigh the kitten and you measure the height of the building next to you. And lo and behold, there's a strong correlation. And after about a year or so, the building will stop rising and the kitten will stop growing, probably. And then the correlation will hold on. So now, based on the data, there is no way for you to know whether the cat is causing the building to grow or the building is causing the cat to grow, or if it's just a coincidence that the two of them happen to be growing around the same time because you just happen to get the cat around the same time the building's rising. So there's no scientific experiment that is going to establish this kind of thing without you understanding how cats work and how buildings work. And it's kind of it's almost like a mental handicap that people think that they are only able to think scientifically in this kind of hypothesis experiment way. Because no, as a matter of fact, all of your life you are understanding things through just experiencing the world and through knowing about the world and through using your brain. And it's just how we know that the cat isn't causing the building to grow. And it's how we think. It's how you've figured out at some point that water quenches your thirst, food alleviates your hunger, and so on and so forth. We know so much about life without having to go through the scientific method of knowing about it, of experimenting and proposing hypotheses.
There was a topic I was going to bring up. I think I'll have to do it the next time you're on because I want to stick to this a little bit. In the West, it's hard to know exactly what public opinion really is on it, but certainly the political elites in the West do believe in so-called climate change, and they generally believe that its effects will be severe, at least. Now, what I'd like to know is, are you in Lebanon?
No, I'm in Jordan.
Oh, you're in Jordan. I beg your pardon. I was thinking about, did you study in Lebanon?
Yeah, I lived in Lebanon for a long time. I studied and I worked in Lebanon, but now I'm in Jordan.
Okay, so you're in Jordan. Okay, so in the course of talking to ordinary people there, do they believe this over there? Is this just a Western thing, or do they believe it too?
It's interesting. I think over the last 10 years or so, it's become increasingly popular. And it's kind of startling because you walk around and you think, I would say probably a majority of people think that it is true because they just hear it repeated often. And I don't remember. Somebody once told me that basically the CIA had this rule that somebody needs to hear something said 7 times for them to just believe that it is true. So if you can repeat any kind of ridiculous idea from a position of authority 7 times, then people just take it for true. So I think a majority of people have gotten into this because, in most of the world, there are a lot of US NGOs, there are a lot of US-based organizations, US corporations. They talk about this stuff. The media, people in the media, they want to be at the cutting edge. And so they look at what the New York Times and the Economist write, and they internalize that and they start writing about it. So I would say, a lot of people just don't care, but it's difficult. But to estimate, I haven't done surveys and I haven't looked at surveys, but I would say, yeah, particularly as you go into the more educated, more affluent people, then unfortunately, yes, belief is pretty prevalent. But I think it's just been it's been coming down over the last few years because a lot of other things are happening. The world is very, very eventful, and a lot more pressing things happening, particularly in this part of the world, that these kind of luxury beliefs are a lot less convincing, a lot less pressing. And generally, I think there's just a growing skepticism of anything that comes from the West. People are just becoming very disillusioned with everything American, everything European. So I'd say there's more and more skepticism of this.
All right. Well, that's at least something. But what? And I mean, I'm happy to hear that. I wish I could be a little happier. I wish that you weren't also saddled with an educated elite that falls for everything everything that the elites tell them. But as an economist, you're faced with this idea that the establishment tells you is not controversial. Like this is the fact. The fact is the Earth is getting warmer. This is mostly the fault of human beings. The results are going to be very bad unless we make radical changes to our lifestyle. Now, you can come up with an economic analysis of that involves trade-offs. But the thing is, if you don't believe that whole framing of things in the first place, then it would be a waste of time to do an economic analysis of that. So how do you as an economist tackle this question?
So for me, I think, I've studied this quite extensively. My PhD program was in sustainable development. So
yeah, that's interesting.
My PhD was all about that stuff. And when I started writing the PhD, I was a believer myself. By the end of it, I had, my faith was reduced significantly. I'd say, by the time I graduated, I was a closet heretic. And then after I got my degree, I had the courage to come out of the closet and become more and more open about it. So I've thought about this question significantly. And if I were to make the argument against it, I'd point out just two indisputable facts that I think just make it all crumble. And the first one is that we know that there used to be a time in which people farmed in what is today the Arctic, above the tree line. So there's a point on Earth today where somewhere around, I think, the 66th lateral, where north of that, trees don't grow and plants don't grow because the Earth is frozen for the vast majority of the year. But but somewhere, I think it's in Greenland, they dug and they found artifacts from farming communities. So there was a point in time when this was warm enough for people to farm, many, many, many thousands of years ago. And also we know that a few hundred years ago, in the Middle Ages, it used to be the fact that the Thames River in London would freeze every winter. So every winter, the Thames River would freeze. And that was just well known, and it's well written and well documented in all kinds of different sources about London and England in general. So that means that before industrialization happened, we've already lived in a world in which the Earth was significantly warmer than what it is now. And we lived in a world in which Earth was significantly colder than what we have right now. All of that before industrialization. So that means that there's natural variability in the climate. There's always been natural variability, and that climate is always changing. And that the idea that we have just turned on a control knob by beginning to industrialize over the last couple of hundred years, and that has caused some irreversible, crazy damage to Earth is completely untenable. We have pictures, about 100-year-old pictures now, 120-year-old pictures of places like New York, Sydney, where you can see the beach, you can see, the Statue of Liberty, and you can see the water line there. And here we are a century later, and it's exactly the same thing. The picture looks exactly like it was taken today. And so if 100 years of pumping out carbon dioxide hasn't made any difference, and you can see that in all the pictures, then there's no reason to believe any of the hysteria. And then you get into the individual details about how the thing works and the mechanics for it and the kind of evidence that is presented for it. Again, they invoke science because they can't actually tell you something scientific. They can't offer you a scientific testable hypothesis. But then, the second one, perhaps the second thing that I'd bring up, which is which is incredible, is that it was one of the, maybe the only silver lining to the entire COVID episode, was that for a few months, we did have the entire world shut down, basically. Airplanes and cars and factories, three of the major producers of carbon dioxide, basically shut down for months, or at least weeks, during March, April 2020. So that was an incredible natural experiment. We got to see the world as the carbon hysterics would like it to be. We got a significant reduction in emissions. Now, it would have been a perfect time if this was truly scientific. Then you would have expected these people to go and actually test this scientific hypothesis. Because here we are, we've got this reduction in carbon dioxide. Let's see what it's going to do. Time to test some hypotheses, right? Well, they didn't do it because, in fact, if you look at what happened, nothing happened. Not only did we witness no change in weather, no discernible change in global weather, but also, even more importantly and more stunningly, we witnessed no change in carbon dioxide concentrations. Carbon dioxide concentrations continued to go up. And there was no, I could show you the graph for carbon dioxide in 2020 and 2021 and 2019. And you wouldn't be able to pick out which one was different from them because there was no difference. So there clearly was a reduction in carbon dioxide emissions, but there was no effect on carbon dioxide concentrations in the atmosphere, which suggests that, suggests two things. The first, which is, the stronger hypothesis, which is that carbon dioxide is not a control knob for the weather. I think this is really the most important thing to take from it. But also, it suggests that carbon dioxide concentrations are not directly determined by human activity. It might just be the case that carbon dioxide concentrations are rising because of natural phenomena happening on Earth. We've been through periods of high carbon dioxide concentration, low carbon dioxide concentration, and it just might be the case that it's going up. It might be the other way around. It might be that the Earth is warming because it might be that carbon dioxide concentrations are rising because the Earth is warming. Although I doubt there's actual real serious warming going on, because I don't think the evidence they provide for that is very compelling. But I think the main conclusions to take from it is that, from everything that I've said so far, climate is an extremely complex system, and I don't think we have any idea about how it works that allows us to speak with any kind of confidence about what human activity is causing it to do. But we do have a very good idea about what human activity is worth for us. We need to stay warm in winter. We need to burn fuels to stay warm. We need to burn fuels to move around. We need to move products around because our lives depend on it. And it's, in my mind, insane to sacrifice our well-being and our survival in favor of worrying about an extremely complex climate system, which we have no idea how to control or how to operate.
Well, that is how I feel. I would say that again, what is economics, if not, at least in part, a discussion of trade-offs and if an opportunity cost. If we do this, then we can't do that. And even if we were faced with a more serious problem than we really are, there's still trade-offs to destroying the very society that might power the solutions to this problem. So obviously we think very much the same way. What's the best way for people to check out what you're up to?
My website, Saifedean.com, where you can take my courses. And there's also my podcast, the Bitcoin Standard Podcast, which you can find on everywhere where podcasts are, as well as YouTube. And then on Twitter, where I'm pretty active, at Saifedean on Twitter. And that's pretty much it.
Let me make sure everybody knows the spelling. So it's Saifedean. So Saifedean, that's what you're looking for. I'll link to those two outlets at tomwoods.com/2683 for today's episode. And Saif, I wanted to get into the Middle East, and we got to talking about these old topics. I just couldn't resist continuing that. But at some point, I'd like to get you back for that topic. So thanks so much again. Always a pleasure.
Likewise. I guess that one is going to need a whole episode.
It's got to be, because I realized we had about 20 more minutes, and I thought it would not be fair to him to open up this whole can of worms and then have to shut it 20 minutes later. So we'll do that again, based on your availability. But thank you.
Thank you. No problem. Take care, Tom.
And thank you, ladies and gentlemen.
Make yourself and those you love less vulnerable to the regime, both mentally and physically. Get more forbidden information at tomsfreebooks.com and be sure to subscribe to the show wherever you listen. See you next time.
Like the sound of The Tom Woods Show? My audio production is provided by Podsworth Media. Check them out at podsworth.com.